and welcome to the inaugural episode of the AngelBlock podcast. My name is Alex. I am your co-host, and I'm here with Max, your other co-host, and we're both severely jet-lagged and under-caffeinated. Max might just be under-caffeinated, but I'm severely jet-lagged. If anybody doesn't know, we just came back from Mainnet. That's one of the things we're going to be talking about. In general, this podcast is meant to give you some updates on AngelBlock, the protocol, the platform that we've been working on for 2 years. But also we want to talk about just things going on in crypto. Predominantly, we're going to be focusing on a fundraising kind of angle on everything that's going on, just because that's what we're doing. It's what we know also pretty well. But we're going to be touching upon some different subjects. We want to focus on DeFi. Obviously, we love DeFi. We want to be focused on what's going on with layer ones, layer twos, just to share some thoughts that we have with you on an ongoing basis. We'll probably make this weekly, bi-weekly. We'll see. Have some guests. I don't know. We're pretty interesting as it is. We'll see. Max, how you doing today?
I'm doing pretty well. I think under-caffeinated is the right description.
Yeah. I'm lacking it. I'm lacking some caffeine in my life. We'll do all right though. Don't worry about it. We'll take it from here, even in our current state. So Mainnet. We obviously just came back from Mainnet. Max is still in New York. You're going to SmartCon tomorrow, which is the Chainlink conference, right?
Yeah, Wednesday and Thursday, I'll be attending SmartCon. So definitely looking forward to meeting new folks out there. As we did in Mainnet, just met a bunch of folks that are creating some awesome projects, as well as some investors that are very interested to, use our platform and collab.
Yeah. So if anybody listening doesn't know what AngelBlock is, when Max refers to our platform, basically what AngelBlock is a decentralized protocol-based way of doing fundraising. So investing and fundraising that is transparent, on-chain, decentralized. In our opinion, something that this space drastically needs. I personally believe that efficient and transparent fundraising is actually one of the biggest blockers currently in the space. Otherwise, I wouldn't be, devoting years of my life to work on this. I think we can touch upon this a bit later. I really want to focus on Mainnet. Personally, I believe Mainnet right now is fighting for the crown of the top crypto conference. I think that Consensus, back when it was hosted in New York back in 2018, 2019, was that conference, was the conference to be at. I think Mainnet is definitely vying for that title right now. I don't want to sound too jaded, but I know I've said this before when talking to you and other members of the team. Mainnet is the only conference where I really try and attend the panels and the keynotes. Usually, crypto conferences, they're very, unless it's like a DeFi conference, unless it's, an ETH-based conference, which is predominantly focused towards developers building on ETH, unless it's DEF CON, unless it's, something like Permissionless, which was a DeFi-based conference back in May, done by Blockworks. So unless it's like one of those very specific target demos, I think crypto conferences have become very, very general. And they talk about just a little bit of regulation, a little bit of what's going on right now. And it's very high level. It doesn't really dig deep. And I think Mainnet, for someone that, like myself, has been in crypto since 2015 in different ways, it's one of the only conferences that I really try and attend as many speaking engagements as I can, because I just learned so much, which is, again, not to sound jaded, but just not really available at different conferences. So one of the cool things that was available that I really enjoyed was the founder of Synthetics, which I am a fan of, talking about governance and basically how Synthetics approaches governance and the ways that their approach changed over the years. And this is something that I don't really think gets talked about enough. And personally, when I speak to some VCs about what we're doing, I try to underline this as well. A lot of people have this misconception that whatever the token economics or whatever the way that the actual protocol functions at moment of launch, like this is set in stone, right? And it's very weird because none of the top tier projects, and here I'm looking at Compound, I'm looking at Aave, if we're going to take a different angle of it, so maybe talk about BNB, which is Binance's native token. The way that they're currently functioning is drastically different to the way that they were launched, right? And I think that kind of people tend to forget that this is ongoing development. What you launch with is not where you're going to be looking like in 2 years. So talking about trials and errors of approaching governance and the way that you implement governance, I think is really, really interesting. And it's just cool for someone to really talk about like, hey, like we messed up early on. We didn't do this the way that we were supposed to do this when we started this. We're learning from our mistakes. And I'm not sure what the market cap of Synthetics is right now or what the total value lock is, but I mean, it's a big protocol. It's one of the big boys, right? Like it's not something that was launched in the garage last month. Like they've done some cool stuff.
Yeah, and just to add a little bit of my thoughts as to what interests me the most about Mainnet. I really liked seeing a lot of infrastructure projects. So fundamentally, I do think that crypto networks are just recreating infrastructure and opening up both existing use cases and new use cases. So anytime that I see some really interesting infrastructure projects that are basically building the financial Legos, I am totally down to speak to those teams and get to know more about what they're working on, because ultimately what they're building is something that will add value. And even if that specific infrastructure project as a part of a stack is not going to make the whole, is not going to create an entire new use case. It just opens this up for entrepreneurs that can creatively utilize these different projects to construct some really interesting things. So I'm always on the lookout for both infrastructure projects and then also projects that are just utilizing current infrastructure that's being created in the space to do some interesting use cases. And as I was just going around in Mainnet, I just found it interesting that there is also a current view where you can pretty much build anything, but at the same time you want to keep in mind compliance. So therefore, you want to keep in mind the regulators. And in the U.S., you have to think about like what the SEC would think about your project in terms of being a utility token or not. And then on the other hand, you have as well as the CFTC and such where you'd have to consider, whether you can compliantly be able to act. And so one of the things that I just came across is as soon as we entered Mainnet, there was the news about the CFTC announcing a fine on I think it's BZRX, and that just kind of like clicked in my mind, like, oh shoot, like, we can't just go out and build stuff. We also need to keep in mind how to do things compliantly. And so this kind of goes back also to what we're doing with AngelBlock in the sense that I don't think that in current conditions here in the US, the SEC and CFTC and the other regulatory bodies that we have to abide by are in a place where they would be open to working with folks within the industry, crypto industry. However, because of this, that's part of why we are currently focused on creating a path to, say, compliance. In other words, steps that would that would enable like a new project to understand what's that path to be able to both be created, to start, to initiate, but also to operate compliantly. So
can I jump in right here? Because
sure.
I want to ask you something, because I've been holding a question in my mind and letting you run, and I definitely want to talk compliance. But when you're talking about infrastructure, a question formulated in my head, and I really don't want to lose it. I think that, I don't know if you'll agree with me here, but it would seem that some of the best infrastructure plays are made, meaning the infrastructure is built and it's being developed or being launched primarily in bear markets. I just had this thought when we look at ETH, when ETH launched 2014, 2015. I'm going to have some ETH maxis mad at me that I don't know it off the top of my head, but it launched somewhere there, right? And Bitcoin was essentially in a bear market till the beginning of 2015. So that is one big infrastructure play. I mean, it's the biggest dApp hosting L1 currently on the market, right? Then we have plays such as Avalanche and Solana. I'm pretty sure Solana 100% launched in 2018. So that's like right in the bear market. I know they were raising in 2018. Definitely the raise was in 2018. So maybe 2018, 2019 launch. I have to double check that. Avalanche also launched, like, I think it was the bear market. But it would seem like where I'm going with this, it seems like a lot of the best infrastructure plays are made during bear markets. And then the bull market, the job of the bull market in a way is there's this flurry of builders. There's these people that are utilizing the infrastructure built in bear markets and just going, balls to the wall, building everything that they can. Obviously, this cycle, we had a few really interesting DeFi plays on various chains. We also had a wild west of play to earn and GameFi, right? So that's obviously another big portion of building on the existing infrastructure. I don't think there's a lot of like infrastructure building when things are like super hot. Like if someone's listening to this, that can correct me. It's just a thesis that kind of formed in my head while you were saying that. But obviously, we're in a bear market now. Oops. So infrastructure plays probably being a pretty good topic right now when everything slows down.
Sure. I mean, I definitely have some thoughts here. My thoughts are that as we're in a current environment where interest rates are much higher. So what this means is there's less money to be put into startups, or rather, I would say that probably from an investment angle, folks are more risk adverse. So going back to when times are hot, and just to define what I mean, but when times are hot, it's when there is more investment dollars, VC capital out there. I do think that there are a lot of projects that are great infrastructure plays as well. However, there's just a flurry of other projects where maybe they're getting funded on just an idea, meaning that the infrastructure project population in comparison to just the majority of the projects that are just being funded via an idea is probably smaller in times that are, let's call it hot. However, as things cool down from a VC funding standpoint, it does make sense that those projects that have been building something and have a path to continue getting traction will just exist, either because they're self-funded, or rather they were smart and they were able to grab quite a bit of capital during the bull cycle. Whatever it is, I just think that a lot of those projects that were in idea phase and never materialized into something kind of die off, especially if they never had enough funding, or maybe the team behind it to execute upon.
Did I tell you about, speaking of funding, I reached out to some people recently. I think everybody, after the crash that we had back in late May, early June, obviously, 3 Hours Capital turned out to be insolvent. They were way over leveraged. We had the Celsius scheme. I'm not gonna be using any too harsh words, but yeah, it turns out they weren't operating in a very legit way from what it seems. We obviously had the implosion that was Luna and the depeg of UST. So we had a lot of frustrations and pain in the crypto markets, and the way that it was tied to the entire macro cycle made it even worse. But obviously, I think over the summer, a lot of builders, a lot of people, whether you're a VC, whether you're an angel investor, or whether you're just building, cool stuff, I think everybody needed some mental time off. Like we had to step away from the charts. Like we're all, predominantly either all in crypto or predominantly all in crypto. So I think everybody just needed some time to cool off. So I know I definitely limited just my interactions with some crypto people outside of the AngelBlock team because I needed to reshape my framework, so to speak. But I have been reaching out to some friends and some people that I know in the industry in the last, month and a half, just trying to gauge their sentiment, how they're approaching everything, and just, talking with some cool people. And I was actually really curious that one VC who will go unnamed, that he's not writing back. I'm just like reaching out and like I want to show, like we have a cool product demo. Like I'm not counting on anything there. It's just nice to have that kind of relationship. And a month goes by, no reply, and like we used to talk, and I'm like, what's going on here? Like this is very odd. Like I have a good relationship with the people in my network. This is strange. And I took a look at that said VC's portfolio, and it is predominantly play to earn and GameFi. And I just think he's down bad. I think he's really down bad because I saw some of those projects, and I think we're not talking enough about this, in my opinion. The implosion of GameFi. Like I still think there's a lot of really cool stuff to be built. I think that it's a very, very interesting market segment. But just some of the things that were coming out, early this year, like there's no gameplay. There's just very short-lived Ponzi-nomics of like, hey, play this game, we'll give you a token that's essentially worthless, but you're getting a token, and as long as the market's hot and people are buying it, don't worry about it, right? So I don't know, just something that was in my head, like the way that a lot of times when you're on the outside looking in when it comes to fundraising, and it doesn't matter whether it's like equity fundraising, like classic Web2, or whether it's crypto fundraising and investing, when you're on the outside looking in, I do feel that saying the words venture capital, people have this connotation of like, these guys really know what they're doing. They set market trends. They rarely make mistakes. And it's a very short-lived, sentiment when you're actually fundraising. Like there's obviously a lot of good players in this space. There's a lot of really smart investors. But just because you're in venture capital, just because you have a solid checkbook and the capital you deploy, it doesn't really make you smarter than a lot of people. Like that's what some people in this space don't really understand. Just because you're VC backed doesn't mean that this is the next holy grail, right? Just because A16Z puts money into you, which is obviously probably the largest fund in crypto right now, if I'm not mistaken, just with their AUM or the capital that they deploy. Just because you have that brand recognition, it's not really a certificate of, hey, you will achieve amazing things, right? Like that's just the capital side. And it really comes down to the team and whether the team can deliver or not.
Yeah, and I do have some, more thoughts on this actually. So whenever I look at any project, I always try to understand what's the value that is being generated. And being a guy that's been in finance for over a decade, for me, value goes back to revenue definition. Like, what's the revenue being generated? So, just using the GameFi example. So, within the token economics of the GameFi project, what I've been noticing is that there's no like external value coming in. And so what I mean by that is that it's really cool, like having all these token economics. If you have like a brand name, like you mentioned, like a VC fund, like A16Z, definitely like the brand adds speculation to the, to prices and such. Now, just taking a quick step back though, in terms of how I define value, it's value is a combination of intrinsic value being generated, and there is also speculation in the equation. And this is just my way of viewing like how does like pricing come to be. And so for the most part, I think that if we take that equation of intrinsic value and speculation during the bull cycle for a lot of these GameFi projects, speculation just was way up here. And so intrinsic value might have either not existed or been just way down here. And so what that means is as you go into a bear market, this speculation just disappears. And so therefore, if there was any intrinsic value at all, we're basically seeing what that is based on the market's perspective. Now, going back to the other idea behind like having external, some type of external value coming into the project, this can be, I don't know, if these GameFi projects like would partner up with, I'm just going to make this up right now. I don't know, partner up with some of our favorite games, such as like Call of Duty. And when a purchase happens, a part of that goes back to the project. Like that's actual external value going into that project. And so, I mean, this can happen in more crypto native ways where you have maybe a stable coin coming back into the project or Bitcoin coming back into the project. Anyways, all I'm saying is that I do think for a lot of these projects, there needs to be some source of external value coming in. And the other side of that, the other part of that is also in terms of pricing. I just think that a lot of what we saw in the markets in the bull cycle was just a lot of speculation, and now we're seeing a lot of that speculation disappear.
Yeah, we're in this position where basically a bull market is a lot of people speculating on what the expected value will be in the short term or long term, right? Like that's why you still have a lot of people coming into Bitcoin when Bitcoin is 60K USD, right? Like, and that's usually the people that are not that well versed in the space. They're not residents, they're tourists, a lot of them, right? Like I remember back in, this was end of 2017 when I remember my mom like asked me like, is this a good time to buy Bitcoin? And I said, no, by no means is this a good time to buy Bitcoin. This is probably the worst time to buy Bitcoin. Like it's always good to buy Bitcoin, probably, but not right now. And so what we have in bull and bear cycles, and this is all based on our human psychology. Like we're very flawed as beings. And the more that we understand the ways that we're flawed, the better, because it just makes you a better investor. So in bull markets, we have this expectation of what the value can be. And if we get carried away with it, and I think a bear market is just nothing but the inverse of that, right? So just because, like that's the funny thing about bull and bear markets. Like if we were very rational human beings, especially in crypto, we would have less volatility, a bit less fluctuation. But because we get so amped up with what, Web3 and crypto and then the utility value that it brings and all the problems that it solves, and we all in some way or another eat this hype up, the crashes make it that much more painful, right? Because the crash is when the expected value meets the actual value, like a more objective value. Not saying that the projects that are their current market caps or their current price points, that this is where their value actually lies right now. That's not what I'm saying. What I'm saying is just because we get so amped up at market tops, the market bottoms are that much more painful. So probably real value is somewhere in between those two price points. So I don't think that 20K for Bitcoin and what is it now, like 1350 USD for ETH, like I don't think that's the real intrinsic value in terms of price for those projects. But I also don't think that 4.5K ETH and 69K Bitcoin is also a very realistic value of a price point that should be held, because that's where the actual intrinsic value lays, right?
Yeah,
that was my very convoluted way of describing the way I see the market now.
Yeah. So actually, just for fun, dude, I remember back in the day, we used to talk about NFT projects all the time. And as of late, we haven't talked about one NFT project except for AngelBlock's NFT project.
That's true.
I mean,
it's the only one I'm buying.
Yeah, right. Me too. Right here, Angel. So, but beyond that, I mean, just real talk, like, is there any NFT projects that you're excited about? And obviously, you can talk about AngelBlock as well, AngelBlock's NFT, because I think it's pretty cool that it's going to have like utility on the platform and stuff. But beyond that, are there any interesting NFT projects that you are looking at? And I just am curious to hear your thoughts as to like why you find them interesting, because this is something that we used to talk about all the time.
Yeah. Like earlier this year, we were still on the hype train, and obviously NFTs. Like I'm a fan of NFTs in general. Just a bit of backstory. Like I first started dabbling with NFTs back in 2017. So this isn't just me, as some random dude being like, oh, like these Bored Apes are pretty cool or whatever. Like I was really interested in NFTs 5 years ago, and I think in general, NFTs are in a very interesting space. I think they need a lot of room to grow. Just from a speculative standpoint, I think there is more pain ahead of us in terms of the way that we value NFTs. I'm not really that bullish on any project. I have been out of the loop. I need to admit this. I have been out of the NFT loop for quite some time. I have been focused just on AngelBlock predominantly, and some angel and VC investing on the side. But I think that if we look, the way that I approach NFTs and this last NFT bull market, there are many similarities between what was happening all of last year in NFTs and the 2017 ICO boom, right? So towards same as in the ICO boom, towards the end of 2021, everyone and their grandmother was launching an NFT collection, which is obviously very problematic. Max kind of ran away on his video right now. I have no idea if it's recording or not, but I'm just going to keep talking. I definitely think that, it's just, I think your New York internet is rugging you right now.
I think
so when it comes to NFTs, it's this classic market top where the supply drastically exceeds demand. And I think that same as the infrastructure TED talk we gave in 30 seconds at the beginning of this recording, I do think that some really cool stuff in NFTs will be created in this bear market. But I don't think that Monkey Pictures, valued at 70, 75 ETH price floor, are a great signal that they're in a bear market just quite yet. I do think that we should expect some more Max Payne ahead. But yeah, I do love AngelBlock NFTs, and this is just not to shill our own project, but this is one thing that I really like, when it's not a bunch of Anon founders just doing an NFT collection and who knows what's going to happen with the money. I really like this angle of crypto native companies creating NFT collections that they will be developing in terms of utility and their use cases for years to come. Because if you don't really have any backing behind this NFT collection, and 4 Anon dudes is not backing in any way, in my book at least, I think there's some really interesting things that can be done. And this comes down to what I said at the very beginning of this podcast, which is I'm super excited, and I'm a big believer of continuous utility development and feature development, and the way that these NFTs are used, the same way, even if you have an ERC20 token or any other kind of token, I really do think that token economics and utility value is something that should be continuously developed. And it's not just that I deployed a smart contract, it's in ERC20, there's 8 million total supply, and it's not going to do anything, or it does this one thing, and in 5 years, if you ask me, it's still just going to be doing this one thing or absolutely nothing. So I do think that having in the back of your mind this idea of what are some of the cool things that we can do with this going forward is really important. And I just think, like, I'm not going to sound too bullish right now, but I just think that 99% of NFT projects right now, it was launch, get some money, maybe we'll give you a hoodie, That's pretty much it.
Yeah. I mean, personally, I'm still in the process of formulating my thoughts around NFTs and, how they can, how value can be created. So a few of the thoughts that I've started, looking into is, for example, the Bored Ape Yacht Club. So the Bored Ape Yacht Club to me is a brand. And basically it's a very strong brand. And so therefore there is this path to, be able to put a community around this NFT project, create a really strong brand, give token gated access to that community. And what's really cool is that it seems also like a grassroots effort where the members of this NFT project are the ones that are also creating value by, just to give an example, opening up a restaurant. Like I forget which city it was, but opening up a restaurant where they're utilizing the this new brand, but also creating a new business model on its own, which in a way is pretty cool.
Are you talking about the Gary Vee thing?
Is it the Gary Vee thing?
Yeah, I if we're talking about the same thing, it is. It's the Flying Fish Club, I want to say, and it was a New York restaurant that announced an NFT sale. And basically, it's like a subscription to the restaurant. You can only get in if you have that NFT. And their plans were to launch in 2023. I don't know if this market downturn changes anything for them, but I was following it as they were announcing everything. So I don't know if you're talking about this, but that's the thing that popped in my head.
It is that.
Okay.
Yeah, for sure. So that's just one example of like how one member within that community can just create something around it, right? And so therefore that's kind of the bottoms up approach. And at the same time, I think Bored Ape Yacht Club had been acquired, so there's also some tops down type of work that's being done on the brand. But just in general, being able to create like a brand where this can all happen is very interesting, and at the same time having things token gated.
True, but if we're looking at, I don't know whether we should call it value. I'm not entirely sure, but I'll try and get to where I'm trying to go right now, and so we can discuss. But like Ape Fest, right? Which was around NFT NYC, I think, or it was like similar dates or something. Like, is 140K USD monkey JPEG really the reason that like, oh, I got to meet other holders and see Eminem and Amy Schumer live? Is that enough? So like, I am like really like, I love one thing that I can't knock NFTs for, and I think it's actually their biggest asset, is the way that how quickly and efficiently you can mobilize and form a community around an NFT collection. So obviously it's going to be very interesting to see whether this prevails in the bear market, or whether it was just, bull market hype that really these NFT projects were able to leverage this very effectively. But I definitely think that, a lot of the value created, whether it's, these side events and concerts and, token gated access to something, like I don't think that, $280,000 is sufficient. Like those aspects are not sufficient to have that kind of price value, right? So I agree that Bored Apes, it's absolutely a brand now. The question is whether they can keep it going. Like, will this brand survive, let's say, a 3-year crypto winter, which I don't think it might be that long personally, but what if, right?
Yeah. And so, I mean, this is just more of like saying what I've been seeing on the NFT side. Now I would love to talk a little bit more of like what excites me. So what does excite me about just NFTs in general is the idea that it's unique, right? It's a unique identifier of some sort. And so that, as it relates to, for example, what we're doing in terms of giving specific benefits to our platform, that is where it becomes really cool. So just to throw out some other things, also what we're seeing like with music and being able to track royalties via smart contract, that is really cool without having to have someone in the middle. So in my, what I'm most interested in is to see some existing use cases utilize some of the smart contract technology that exists, and just making things more efficient, where creators get to get a bigger cut of the pie versus not. So these are some of the areas where I definitely see interest. And also just going back to AngelBlock, I'm just really excited about, if a person that holds our NFT, then ultimately they can either have better benefits from a startup standpoint, or as an investor. Obviously we're still in the process of defining the specifics, but I just think that this right here, you can really understand utility of that NFT if there's something like tied to it. And when I say tied to it, I'm talking about in certain platform or such.
You're supposed to talk for one sentence longer so I could finish my sip, but it's all good.
Well,
no,
no,
I definitely agree.
Take a sip.
Yeah, I definitely agree with what you said, but there's a lot of unknowns right now. I definitely don't want to turn this into an NFT podcast. Just so let's make a switch. I do want to talk about L1s and L2s. So NFTs being what they are, we'll see. I'm bullish on some. I'm bullish on the 1%, just to kind of summarize what we've been talking about. What that 1% will be, we will see. I do think they're, as mentioned, more max pain in front of us, but they're really cool. I like NFTs. NFTs for the win. L1s and L2s, that was a really big thing when it comes to what I saw and heard at Mainnet. Obviously, you and I, just because we're very bullish on infrastructure in general, and obviously there is no better infra than L1s and L2s. I think it's a ever-changing space. It's like L1 ecosystem, what we have right now compared to what we had in 2016, 2017, vastly different. Obviously, ETH is still number one when it comes to dApps. Like an L1 that actually hosts dApps, that's number one, undisputed. Obviously, this cycle we had the rise of Solana, Avalanche, BSC doing some good, doing a lot of bad in terms of scams and rugs, just because it's so easy and cheap to run anything on BSC. Same with Polygon. Like all the spam NFTs that I get and that I need to hide in my OpenSea account, all of those seem to be on Polygon. Fun fact, every single scam that was pretending to be AngelBlock NFTs, which is our collection, every single AngelBlock NFT scam collection was launched on Polygon. Just because it's so easy and cheap to do, like it makes you think twice before you actually want to launch something on ETH. But we got to hear the fireside chat between Ryan Selkis from Masari and Mo Shaikh from Aptos, which is a new layer one that's coming out probably this year. So next 3 months, we'll see how that goes. I think they raised like $350 million in funding, which is just bonkers. And I actually remember writing Anthony from Aleph Zero when we were at Mainnet. And one of the things that I said was, like, obviously I hope they do well, like, fingers crossed, but I'm always very hesitant when I see something like an L1 with $350 million of funding, because I get PTSD. I get these Vietnam flashbacks to EOS and Tezos and all of those. Like Tezos is doing all right. I know that the community is trying to basically relaunch EOS. Like they took control of the blockchain from Block One. And if anybody here, if you weren't around in 2017, 2018, EOS and Block One, which was the company behind EOS, they raised $4.2 billion, if I remember correctly, which is just an absurd amount of money. And there is, to this day, very little to show for it. So whenever I see these huge raises of projects that are not even launched yet, I do become very, very skeptical. It seems like the L1 narrative, the way that it was shaped around Solana, is still continuing, which is super fast transactions, probably from what it looks like at the cost somewhat of decentralization, right? Which is something that Ethereum is not necessarily willing to do as quickly or implement as quickly as some of these newcomers to the space. So we have that. We have the former, I think it's the former Libra team from Facebook, predominantly, that's building Sui, the SUI. I kept calling it Sui, and only in the conference I learned that you pronounce it Sui.
That's what you get. One of my good friends. That's one of my good friends' last name. Danning. Sui.
Sui or Sui? Which one?
Sui. I don't know how to pronounce the last name. Sorry,
Okay.
Sorry, Danning.
So that's another thing that's coming out. And I don't know, Max, what are your thoughts on these new L1s? And obviously we can't talk about new, quote unquote, new L1s without mentioning Aleph Zero, right? So how do you approach everything with the ever-changing L1 landscape and how maybe A0 plays into that, or how these newcomers play into it? What are your thoughts?
Yeah. So, I mean, I still think that the number one L1 is Ethereum. And it's where it's kind of paved the path for the whole entire concept of L1s to start smart contract platforms, just to rephrase it, as to how I think about L1s. And I just think that this is going to continue to be a primary L1 that we're just going to continue seeing. So the way that I see, say, faster L1s, take for example Aleph Zero, I think it just opens up new use cases. And so what I mean by this is if it's like extremely fast, really quick finality, etc. It just opens up new use cases in say the financial world. Perhaps it's trading, it's MEV, protecting MEV, etc. And that's where I become interested. Now, just to talk a little bit more about Aleph Zero specifically, I also think that it's really important to have a strong relationship with the team that you're working with. And so just to give a little bit about our history, actually, just to start my history, I started crypto with Aleph Zero. Anthony Solchik is the first person I met in crypto, and the first person that brought me in to the team and introduced me to both me, Hao, Adam, Matt, etc., but also like conceptually what was being built. And so
the names Max just mentioned, for anyone listening, that's the co-founding team of A0, just if anybody doesn't know. Sorry. Go ahead.
Yeah. So therefore, from a relationship standpoint, I truly believe in the team. Like, I know that they can deliver. And so this is the reason why I am very passionate about Aleph Zero, the project, just to see that progress from 3 years ago when I first started with the team, that transition from being their head of finance to now advisor, and to seeing the project actually go into testnet. So that is really cool. And so I'm personally really excited about smart contracts being launched, and then also them working on their privacy solution, which is called Liminal. So just kind of summarizing my thoughts. I think that the new L1s open up new use cases, but also I do think that it's important that there's a really strong team behind those projects to make sure that these projects, are successful, that there's attention to the projects being built on top of them, etc. So, and then for Aleph Zero, given that I know the team personally, I just really believe in them being able to deliver, and they have. So I just think it's really, really cool.
Yeah, I definitely don't want this to turn into Aleph Zero, fanboy podcast, because I want to say some nice things too. But I'll keep it brief. And I think a lot of people are really bullish on A0 because of the speed, but I'm predominantly bullish because of their emphasis on privacy. I think that is their unique angle, and every decision that they're making, every development that they're discussing, I know has this emphasis on privacy, which I think is necessary, and I think it's really cool. History has showed us that if you want some additional privacy, it's not very easily achievable if you're using a pseudonymous layer one, such as Bitcoin or Ethereum, because they're not anonymous, they are pseudonymous. And if you're trying to add some anonymity to that pseudonymous layer one, things get very, very problematic, because that is what the regulator is coming after. The example of Tornado Cash or absolutely any other mixer, we might be living in this on the verge of regulators coming down on these privacy providers, these mixers, and anything else that adds those additional layers of security in terms of privacy. So I do think that native privacy features for an L1 are incredibly important. I don't think there is, outside of hype, I do not think that there is a lot of room in the L1 space if you just come out and say, oh, we're fast. Well, yeah, so's Avalanche, so's Solana, so's, these Aptos and Sui and Aleph Zero and all those. Like speed is not the end game, right? Like it's a nice feature, but it's not the end game. Polygon's fast, BSC is fast, but so what? I think we are moving to this, like everyone's trying to be super, super fast, but the number one blockchain, on the block right now is also like the slowest one, which is Bitcoin. So maybe speed isn't that important. We'll see. But it definitely is really, really important for a lot of people from what I can tell. One thing that I've also been thinking about, Max, and I don't know if you have thoughts on this, is we are, and this ties into speed directly, right? So with this development of new layer ones and everything is faster than the last one, do we need L2s to the same extent? What is the role of L2s right now? Because I've been thinking about this. Like, I love L2s. I think their layer 2 is a great solution for a lot, especially for Ethereum, right? But when you have these Solanas, when you have the Aptos, when you have the Aleph Zeros, like, let's say that the next cycle, that top layer ones are Aleph Zero, Ethereum, Avalanche, Solana, and Aptos, right? Let's just say that. Do any of those chains really need layer 2s apart from Ethereum? Like it's interesting, right? Or is it just my jet lag brain that thinks this is interesting?
No. I think no. I've been thinking the same, my friend. I've been thinking the same because I think it just depends. It depends on the use cases. Maybe these are use cases that we don't even know about just yet. So perhaps you need 1 million times faster through an L2, or perhaps you need extra privacy through an L2, such as ZK rollups and such. So my answer to you is I don't know, but perhaps in the future, I think it's just going to depend on the type of use cases that come out.
I definitely think those. Go ahead.
Or rather, if there is a use case that that someone wants to focus on, then I'm sure that folks would work on some L2 that would enable that to exist.
Yeah, and just to go full circle with what we started talking about in this podcast is I'm definitely bullish. Like, not to say that I'm not bullish on L2s at all. I'm just thinking long term when all these L1s go to the place that they're going. They quote unquote achieve their end game, right? Like what happens to L2s then? That's basically what I'm trying to say. And it's just an open-ended question. I don't have an answer to this. I'm just being philosophical in my current state. But something that I definitely do think that is super interesting when it comes to L2s is their use case in gaming, right? I do think that is really cool. And I think that's going to happen a lot sooner rather than later. And that's something that I'm definitely keeping my eye on, is the way that L2s are used in gaming. Because right now, I mean, goddamn, it is tough to run anything gaming related on an L1. Like, no matter how fast you are, like there's a lot of weird stuff that goes on into that. But that's just my 2 cents. I don't think we're going to keep going much longer. I think this is a good first episode. I don't want to overexert our listeners. Hi, Mom. The 4 of them that will be probably listening to the first episode. I definitely want to let people know that if you do have any questions, if you want us to talk about anything, if you just want to hear our 2 cents, if we get enough questions, if we get enough people's comments from our community, from other communities, first of all, that would be amazing. And thank you so much. But second of all, I would like to have this 10, 15-minute segment towards the end of every episode where we get through your questions. So that's just something to keep in mind. Obviously, we don't have anything right now because we're recording this in stealth mode and we're going to be launching this in stealth mode. But, if anything comes up in the next days or weeks, like, we'd love to have you on. Another thing is it's not just going to be me and Max going forward. This is the quote unquote low budget version of this show that we will repeat. Like, don't worry, we will do just me and Max many, many times going forward. But we definitely want to get some guests on the show. So I know I definitely want to get Anthony and some other people from the Aleph Zero team talk about L1s a bit more, just because I think it's a really, really interesting topic in this space. I know we're definitely going to be talking with some VCs going forward, getting their 2 cents on everything going on in space, how they're approaching 2023, what their thesis is going forward after this crypto meltdown. And another thing that I really want to talk about, and we will be getting some lawyers to join us, some crypto native lawyers, is regulations and jurisdictions. And if you want to build, where should you build right now? Like, what the hell is going on with crypto regulations? Will the SEC find you absolutely anywhere? Those questions and more will be answered in the near future.
Awesome, man.
Thank you. I appreciate the support, Max. All right, guys. Max, you want to say anything to wrap up, or you want to leave it with me?
I'll just leave it with you, my friend.
All right. Well, thanks everyone for watching, and hope to see you soon. Take care.